Welcome everyone to our panel for today, which is the evolving systems of fintech. In this session, we will explore how fintechs can help small island developing states and developing nations and explore new economic development opportunities for their communities. We are recording and streaming live on YouTube, Twitter, Facebook, and LinkedIn. My name is Gemma Green, and I'm the co-founder and chairman of Power Ledger. We're a global technology business, and we make software for distributed and decentralized energy markets, supporting electricity retailers, network operators, and multinationals. And we've got a focus on democratizing power for a sustainable future. Before I begin, I need to let you know that there is a poll on your screen so that you can get to know who is attending today. And all your questions can be added to the Q&A box. And those questions, we'll address in the Q&A section after our panelists have first had a chance each to present. So we'll just take a moment now are we going through the poll now? Sorry.
Yes, indeed. So the poll is on screen. Please go ahead and answer. And I just want to let you know, Gemma, that Lavinia has joined us too as a speaker. So we have all the
lovely. Welcome, Lavinia. Excellent. We'll give everyone a chance now to fill out the questions. There's just 3 questions, so it shouldn't take very long. And I think it'll be quite interesting to see the different backgrounds of people and what they're working on. Excellent. So we've got strong representation from Europe, 32%. And then a lot of people from the Caribbean. Welcome. It's great to have you. 16% from the Pacific region and Asia as well. And then a very diverse landscape of sectors as well. Private sector, predominantly 68%, NGOs 16%, as well as government. And then industry, a lot of people that are working in finance and environmental services. Energy, strong contender as well. Welcome, all the people from those sectors. Great to have you. Okay, we're going to introduce our panelists for today. We have 4 highly esteemed panelists. I'm delighted to welcome Christopher Jahan, who's the director from We Are Guernsey. Welcome, Christopher. Also, George Mangione, the senior partner and head of audit from PKF Malta. Welcome. Lavinia Osborne, who's the founder of Women in Blockchain Talks. Welcome, Lavinia. And lastly, Eleki Bolatawa, the Director of Policy Programs and Implementation from Alliance for Financial Inclusion. So each of our speakers will have 7 minutes to present. So we're going to kick off with our first presenter, which is Christopher Jahan. Over to you, Christopher.
Thank you. I'm Christopher Jahan, as well as being director of We Are Guernsey, which is the promotional agency for Guernsey, and which also runs an outfit called Guernsey Green Finance. I'm a financial services and business consultant. I've been in the finance sector for nearly 30 years. Fintech is a rapidly evolving proposition, and it's something that regulators can't keep pace with. It's something that governments struggle to keep pace with. And it's something that island nations can use. However, we need to make sure that we have a number of things in place. One is the infrastructure. Even in a well-developed island like Guernsey, which sits just between England and France, what we found during the lockdowns that we suffered as a result of the COVID pandemic was working from home was all very well, but we didn't have the broadband connectivity that we needed to make that as easy as it should be. A bit like closing the barn door after the horse has bolted, we're now starting to lay out fibre here. I think that the other area is very clearly regulation, and we have a government here which is very up for moving forwards and embracing fintech, embracing areas like crypto assets and so on. But we don't yet have the right law and regulation in place. Last year, my firm actually worked with a client, and we got Guernsey's first approved crypto fund in place. And with not having the type of regulation around the assets, the controls we had to put in place on the fund itself are far more onerous than we would normally see. Virtual asset service provider regulation is coming. It's in the drafting phase at the moment, but even then it's probably 1 to 2 years away from implementation at best. If we're going to work in the area of fintech, we need to make sure that our regulation, our legislation is robust. We need to make sure our practices are robust. Areas of fintech, like looking after client data, mean that we need to have the right data protection regulation and legislation in place. So everything needs to come together, and we need everyone to work together. But what we can do as small islands is we can actually look to areas like forming industry government regulator working bodies, working panels, working groups, far more easily than bigger jurisdictions can. I mentioned before that we got our first crypto fund authorized last year. And actually it was also Guernsey's first exchange traded fund, or ETF. However, to make that fund viable, we actually needed change to the financial services regulation. I'm pleased to say that we actually achieved that in approximately 6 weeks. That's the sort of nimbleness that our small island jurisdictions have that maybe larger jurisdictions don't have. If we think that we can move nimbly in that way, we can move nimbly in many other ways, with enabling regulation, with things like smart contract regulation, into areas that can enable our private sectors, our economies to actually benefit from fintech. It's not an area that every firm is working in. I still see many firms working in, particularly the financial services sector, who are still relying largely on manpower. We don't have the technology advancement capability that maybe other jurisdictions have. So it's around working with other jurisdictions rather than necessarily having all of the talent grown on island. And that's something that's quite easy to do. So, for example, I favour using fund administration firms in other jurisdictions like South Africa or the United States, where there are big firms that can do that while keeping the higher skilled minded management roles here in the island. So we can do things that we otherwise may not find able to do within our constraints, be that the technology infrastructure, be that our population sizes, be that the constraints of the land we have, meaning we can't actually vastly increase our populations. Whilst Guernsey is a very innovative jurisdiction, it's also only a 25 square mile jurisdiction. And we can't vastly increase our population to actually move more into areas like fintech, digital, and so on. So realistically, my feeling is that we are well placed, but we need to work well with others. We need to build our own infrastructure. We need to make sure our legislation and regulation is properly placed. But being small jurisdictions, we can do that much faster than other jurisdictions can. We need to learn to work within our jurisdictions, between industry and government. We need to work industry to regulator or regulators. And we need all three of those to come together and work together in helping to move our jurisdictions forward. I look forward to hearing what my fellow panelists have to say. But I'm a massive fan myself of fintech, and more than that, fintech that can actually enable us to move forward with robust economies into the future. Thank you.
Thank you so much, Christopher. Our next speaker is George Mangione, who is the Senior Partner and Head of Audit at PKF Malta. Please welcome Christopher. Sorry, pardon me. Please welcome George. George, you're on mute.
Hello, I'm mute.
There we go. We could hear you then, George.
So is that working?
Yes, please go ahead.
Good morning, wherever you are. And I'm coming from a small island in Malta and the Central Mediterranean. And I'm very pleased for the organizers who have welcomed us and become a senior partner of an audit firm, PKF International. And for many years, we've been promoting Malta and its financial services since about 25 years now. This revolution, the fintech revolution, is very, very, very useful for small company and island states like Malta to be able to form part and be a host of services, financial services for larger European countries. We are part of the European Union now since 2004, and we also operate the euro. So we have all the ingredients going forward to have this banking revolution put in place. 4 years ago, Malta has taken the initiative of placing legislation, very detailed legislation, to introduce blockchain technology here in Malta. So we have from the regulation part of view, an organization, MDIA, which goes through the applications for crypto and service providers. So we have the bedrock, really, for controlling international transactions, both in virtual currencies and in fiat currencies. Unfortunately, to some extent, as can happen in other small jurisdictions, the regulation tends to be a little bit gold-plated, more English than the Queen, more Catholic than the Pope, and that tends to scare away new entrants. So the progression in blockchain is there, but it's slower than we thought. One hopes that fintech, which is the subject of today's session, has also been attracted a lot of attention from the regulator. We have one main regulator, so like a super regulator, and they have a lot of international experience in this matter. And 4 years ago, they issued a Sandbox to introduce, to welcome ideas from existing potential fintech companies in Malta to submit their ideas going forward. This has now been collected and analyzed, and only 4 months ago, the regulators for the MFSA, Malta Financial Services Authority, has now collected and put in a way forward for fintech. So this will lay the path to existing and potential fintech applicants to come forward. Anybody hearing us from all over the world now, as we saw from the geographical distribution of the attendees, will probably say, why should a tiny little island in the Central Mediterranean be of any use in fintech in the international circles? Actually, the answer is the dynamic is in Malta and can very much lead towards this using it as a hub. And in fact, for those of you who are part of the European Union, you may recall how the European Union the Commission has issued special legislation for this decentralized finance, and it's the second application facility. The European Union obviously has been looking forward to democratize the payment of the services payment, the payment of various expenses and merchandising. And it is very much a situation whereby this decentralized finance would come towards being available to the now the next, as we are in the fourth industrial revolution, to expand commerce beyond COVID now. Where COVID has slowed down in many countries, practically all over the world, and now that we are slowly working towards normality, one hopes that this fintech, together with encouragement from regulators, can spread and take root, because there is obviously, one can never forget this, that banks tend to look at fintech sometimes as a challenge to their sovereignty and their partial monopoly on the services of payments. But we have to go beyond that for the sake of increasing and exponentially the market services for the world to catch up what it has lost in services during the pandemic. Most of the global economies are in debt nowadays, and are looking forward how to can increase their GDP to make up for the accumulated debt, mainly financing the payments towards pandemic and salvaging companies. And so one would very much encourage members who have attendees who have gathered towards and graciously given us their time to listen to my speech and others, to encourage ourselves to start this democratization process, because actually this is what it is. We are on the cusp, if not already. Some advanced countries have already started it, giving the power to the persons, to the B2B, from B to B, to C to C. The customer will have gain access to payment facilities without the excessive use of intermediaries. And this is what fintech will be all about. Okay, Asia must have taken a lead in this direction, and we hope that other recommendations would come from the audience here, how to make the path going forward easy for the future. Thank you very much. Did I make it in time?
Thank you for your comments, George. And we'll come back to George in the Q&A in a moment. Now I'd like to introduce you all to Lavinia Osborne, who is the founder of Women in Blockchain Talks.
Good morning. I hope that you can hear me okay. I'm on a train, so yes, so I'm on a train, so I actually was going to keep my camera off, but if it adds to the credence of the event, of course I'll keep it on.
That's great. It's great to have your video on, Lavinia, and welcome.
Thank you. Okay, so can I, because it's just bandwidth, can I turn my video off?
Absolutely. Thank you.
Okay, thank you. Okay, so we're talking about fintech, and the area of fintech that I work in, of course, is blockchain. And of course, blockchain is financial technology. When we look at the main case study for blockchain, the first case study, the most popular and spoken about case study is Bitcoin, right? And we have seen how Bitcoin has changed the way that people understand money, exchange money, trade money, and use it to leverage their financial and social economic situation and livelihood in the world. And we see that very much so in developing countries such as Africa who embrace Bitcoin. And from that, many individuals in that part of the world were able to increase and leverage their social economic position, upgrade it, up-level it. I think it's quite interesting to say, however, that when you look at, and it goes back to the first speaker, I think Christopher it was, who was saying about when you are a small country, a small island, you have more ability, there's more nimbleness to be able to implement and innovate new ideas such as fintech. I think it's important for the audience get my understanding of what blockchain is. And of course, this is not about a presentation on blockchain, but we hear the terms and sometimes we don't fully understand it. So, of course, blockchain falls under DLT, which is distributed ledger technology. So all DLTs, so distributed ledger technologies, are not blockchain. And the key element of blockchain is about it being a public ledger. And so it focuses on transparency, trackability, and traceability. How I like to describe blockchain and the whole ecosystem is if you think about trains and train tracks, and yes, I am on a train, so it's quite apt that I'm using this as train tracks. And then we look at cryptocurrency and the different protocols and platforms such as Bitcoin, Ethereum, Cardano, Polygon. Those are the trains. Then within the train carriages, there are assets. For example, pictures, music, clothing, and we could state those as, for example, tokenized assets or NFTs, non-fungible tokens. So the train track is blockchain technology, and it underpins the ecosystem in order for cryptocurrencies to function, for us to be able to purchase it, for it to be recorded, and then that purchase is then recorded on the blockchain, which is a train track, and then within the carriages are the different assets that one can utilize to create wealth, build wealth, share wealth. Yesterday I was I was at the Financial Times Digital Currency Summit, and this area of blockchain in the last 13 years has gone from 0 to 3 billion. That is a huge amount of money. And when we talk about the different countries that are embracing it, and of course we're focusing on islands here, there is a huge opportunity for small governments, small financial infrastructures to leverage this platform, this technology, this ecosystem. And I think it's quite interesting to me how I see that many islands such as Malta, such as Cyprus, are actually embracing blockchain technology and incorporating it into the social economics and governance of the future of money. Dubai itself is not an island. Some people call it a man-made island, but man-made not his island.
Lavinia, we're having a little bit of trouble hearing you all of a sudden. Lavinia. What we might do is come back to Lavinia in a moment.
They are leading. We've got Switzerland, we've got Dubai, we've got in regards to the whole blockchain tech. I'm speaking with it.
I'm thinking that we might come back to Lavinia. We're having trouble hearing you, so we might just turn to some Q&A and see if we can come back to Lavinia for her closing remarks. So we have about 20 minutes to answer some questions now. So I'm just going to read some of those out from the chat to the panelists.
I'm back.
Oh, you're back? Okay, great. I'll hand back over to you
Yes.
for your further remarks, Lavinia.
Hello? Okay.
Hello.
Can you hear
yes,
me okay?
Lavinia. Yes, we can hear you. Lavinia?
Gemma, I think due to time, we might want to move on to the final speaker, Aliki, and then we can perhaps ask Lavinia any questions in the Q&A.
Great. Thank you. So I'd now like to introduce Aliki Bolatawa, who's the Director of Policy Programs and Implementation from Alliance for Financial Inclusion, or AFI. Over to you.
Thank you, Gemma. Can you hear me?
Perfectly.
Okay, wonderful. Great. So thank you very much. Is it okay if I switch on video just for
no problem.
Yes,
uncomfortable with the bandwidth
screen
in this place. Yeah, thank you. Thank you so much. All right. So a very good day and warm greetings to everyone that have joined into this session. We thank the Island Invasion for the kind invitation to participate in this session titled Evolving Ecosystems of Fintech. So, yeah. So before I begin, please allow me to briefly introduce the Alliance for Financial Inclusion. AFI, in short, is a non-political, non-profit organization owned, governed, and sustained by more than 100 member institutions in 89 emerging and developing countries. So we basically represent about 85% of the global unbanked population. And our goal is to support members to develop and implement successful financial inclusion policies that address country-specific challenges. We are based out of Kuala Lumpur, where our headquarters is, and we have regional offices in Latin America, in Africa, a representative office in Europe, and for now, I am in the Pacific, in Fiji, on my way back to Malaysia. So within the Alliance for Financial Inclusion, we have 5 broad regional initiatives. One of them is the Pacific Islands Regional Initiative. In short, PIRI. It was created at the Global Policy Forum in Trinidad and Tobago back in 2014, and we officially launched this in Dili, Timor-Leste, in 2015. So based on the model of AFI, we adopt and share experiences through peer learning platforms, knowledge exchanges, to build capacity, build knowledge, content on policy-related issues to improve livelihoods for those at the bottom of the pyramid, all under the broader umbrella of financial inclusion. So the PIRI platform focuses more for small island developing states within the AFI network. So the membership of PIRI consists of 7 members from the Pacific, the Central Bank, the Reserve Bank of Fiji, Bank of Papua New Guinea, the Central Bank of Samoa, Central Bank of Solomon Islands, Banco Central Timor-Leste, the National Reserve Bank of Tonga, and the Reserve Bank of Vanuatu. And until recently, we have the Central Bank of Seychelles that have joined us as well, based on the geographical representation and the similar challenges that they also face. So within the PIRI network, we have realized the challenges that many of the members face. So this ranges from infrastructure to gaps in legal and regulatory frameworks, to technical capability and resources of policymakers, to looking at issues related to identification and remote KYC, how to build trust, digital financial literacy, the whole works up and until climate change. So this is where the whole concept of AFI's approach Inclusive Fintech for Financial Inclusion and Sustainable Development came forward to bridging the gap, which I shared earlier, the challenges. So we look back to the Sochi Accord. So the Sochi Accord was a groundbreaking agreement which was adopted by the membership in 2018, committing members to leverage the opportunities provided by technological innovations for the achievement of their financial inclusion goals. So the Sochi Accord recognizes the risks of technological innovation for financial stability, integrity, and consumer protection. And it also recommends a balanced approach and oversight and supervision approaches to realize the benefits of innovation without compromising the safety and soundness objectives. Now, the Sochi Accord has been advancing the network through the development of policy guidance in a number of emerging areas under the leadership of the Digital Financial Services Working Group. So this includes publications on consumer protection for DFS, cybersecurity for financial inclusion, RegTech and SupTech for financial inclusion, data privacy, and financial literacy. Now, this is the framework that we work all within the inclusive fintech workstream. The overarching goal is to leverage fintech to advance financial inclusion with the 4 pillars, looking at digital ID and eKYC, open economic payment systems, account opening and digitization of payments, and design of digital financial market infrastructure and system. Now, the base of the foundation from the policy side is how can we come about with enabling regulatory environment that allows for innovation, innovative regulatory approaches, at the same time ensuring that consumers are protected, that there is data privacy, and also within the scope of cybersecurity. Now, I bring forth now the Pacific Regional Regulatory Sandbox. We believe this is the first in the world that brings in together 7 member countries, including Seychelles 8, that now have one portal where they all work within the whole ambit of regulation. So if we look back at the history and the timeline of how this has evolved, back in 2019, we had the first draft guidelines presented at the PIRI Experts Group of Financial Inclusion meeting in the Solomon Islands, followed by the endorsement at the 2019 Global Policy Forum in Kigali, Rwanda. And we went on a roadshow across all the 7 participating countries to socialize and also make clear to the members these guidelines and the implementation plan of this regulatory sandbox. In 2020, we came up with the terms of reference of how this would go about, and we also started supporting some of the members with in-country implementation support. In 2021, the Pacific Regional Regulatory Sandbox portal commenced its work, and we are looking forward to Q2 of this year, where we will officially launch the portal for the Pacific Regional Regulatory Sandbox. So what is the Regulatory Sandbox? So this sandbox is simply a framework that is set up by a financial sector regulator to allow small-scale live testing of innovations by private firms in a controlled environment under the regulator's supervision. So it is a process and set of rules rather than a physical entity or institution. So the Pacific Regional Regulatory Sandbox has the same life cycle as any other typical regulatory sandbox, namely application, eligibility check, preliminary review, in-depth evaluation, setting testing parameters, testing, and exit and termination. So these are the 8 priority areas that the sandbox looks to solving, starting off from digital payments to innovative financial health, how to support MSMEs, looking at solutions on remittances, looking at solutions on digital identity and KYC, also on the angle of capability within digital financial literacy, whole scope of inclusive green finance, and finally on RegTech and SupTech. So who can apply? Here we are opening up to all local fintechs, international fintechs, unlicensed fintechs, licensed fintechs, B2C or B2B focused fintechs, with the whole work of fit and proper that would go into as per usual process in the regulatory sandbox. So in terms of governance, this is the seminal documentations that's in place. We have a Pacific Regional Regulatory Center guideline in place. We have specific roles and responsibilities on how our regional coordination is undertaken. There's an inter-guidance on processes that each participating country would follow, and this is also aligned and governed autonomously by each of the country or member regulator within the 7 members under the PIRI network. So this is a representation of how the portal would look once we go live Q2 of this year. And we're all excited within the Pacific that this would be the first that we are bringing forward across the world. So the journey has been quite a long one, but this is some of the lessons that we would like to showcase as well. I mean, looking from the angle of financial inclusion and ensuring there is an enabling regulatory environment that we all try and promote innovation, how it is important that all these work streams have a coordinated way of doing things with partners and stakeholders, that we collaborate, that we work on data that is evidence-based to support how we benchmark things even in the global scale, and to ensure that there is fit for purpose. So thank you very much. I end my presentation here and I hand back to the moderator. Thank you so much.
Thank you very much. We now have about 20 minutes to answer your questions, and I will go through some of those now. So Germany wants to give the new digital euro more time to establish itself when it's introduced. It's not without reason that there are voices in the EU that want to ban Bitcoin, precisely because they do not want to have to face competition from the digital euro. We also have to wait and see the current wave of regulation of cryptocurrencies to see how much breathing space is left in the end to remain competitive as a digital financial instrument. Will there end up being 2 digital payment systems in parallel? I can well imagine that people would like to avoid this, but decentralization can no longer be banned as it has been. I wonder anyway how the expected mass adoption into the crypto market is supposed to work if nobody knows how it works. Who'd like to answer that? We'll take that as a comment.
Sorry, if I can, just thinking about it. I think the direction of travel, firstly, decentralization is definitely going to be a way forward. And I think that alongside sort of nation blocks like the EU choosing, a route, there's nothing to stop individual nations doing what they want to do. And look, it's not driving towards the globalization that I think we all thought at one point was coming, but sometimes life takes very strange routes, and I think that this is one of them where we're actually going to see a divergence rather than a convergence.
And building on what you just said, Christopher, do you see competition between central bank digital currencies and more distributed digital currencies?
Yes, I mean, even in our own island of Guernsey, there's been some talk about whether Guernsey will issue at some point its own digital currency. We don't actually have a central bank here because we use sterling, so actually we rely on the Bank of England being the central bank of our currency. But I think what it does do for those of us who are tied into other currencies. So, for example, if you look at the European Union as a whole, monetary policy is set through the euro. If you look at maybe island jurisdictions that are tied into the US dollar, we, Jersey, the Isle of Man, are tied into sterling. We don't have the ability to set monetary policy in our own right. Because the interest rates on our currencies, for example, are decided by a nation that we actually have no right in voting the government on. However, what it does, it gives us some autonomy in setting our own monetary policy. And this is actually something that, countries which are part of a single currency bloc can actually do to actually help guide their own destinies away from that central, the general common good of that central currency block. So I think this does give a lot of opportunity for jurisdictions in helping to effectively set their own course.
Great, thank you, Christopher. Any other comments from panelists to build on what Christopher said or respond to the question around, I think just the question also said, if the digital euro flops, we can start all over again in Europe as far as common values and payment systems are concerned. Can cryptos replace that? Lavinia. George, did you want to offer any comments? You're on mute.
Start of the question.
I very much like to contribute to this. I'm not sure whether I'm okay. You can hear me. It's really and truly in deep. Can you hear me? Am I muted?
Yes, we can hear you, George, perfectly. Go ahead.
Going to the root of the problem, it is a question of the hegemony between the banking institutions, international banking institutions. Then, of course, then there is the power of the dollar, the sterling, and the euro, apart from the Japanese yen and the China yuan. And all countries, all these the major countries want to keep control over the payments, and also a country, they want control over how their citizens move their money. And then, of course, there is the very direct interest of the banking institutions themselves, who, quite honestly, they make quite a good buck on the intermediary services that they provide. All these intermediary services will be more or less short gained or overtaken by the efficiency of fintech in the near future. So there has, of course, the pandemic has slowed down initiatives in the past. We know that China has slowly now introduced its own digital currency, and very slowly will start competing with other methods of payment. It's very much something which one cannot suppress. We may remember 20 years ago how the internet started very slowly, and now it is something which is a prerequisite. We can't even live without it. You know, if your smartphone gets broken or is deficient, you want to have a smartphone before even leaving your house. Okay, so this is only in a matter of maybe 12 years. And the big revolution is coming, and there is nothing to stop it. Not only that, however, of course, there have been other difficulties, not only economic problems like the pandemic, which slowed down and left a lot of countries in debt by properly using money and borrowing money to help companies in distress, and also to pay workers who had their jobs curtailed on furlough. Okay, now these difficulties, hopefully we are on the going out. We are slowly moving towards normalization. So I very much thank the organizers of this conference, this session, that this is very aptly timed, that now we should really, clean our slate and look forward to actually take the bull by the horns and look into the necessary regulations. As I said earlier, Malta started 4 years ago to just put in place the blockchain regulations. There has been a little bit of skepticism. The regulators thought that this could be the devil in disguise, and there could be corruption, and there could be all sorts of negligent things. So they gold-plated the regulations in such a way that it was becoming a little bit expensive to set up in Malta. This has resulted in competition with other islands and parts also of the EU who have advanced on the strength of Malta having been too rigid and strict. However, the regulation is there and can form a base for going forward. This will also help the fintech. So I will encourage all the small island states to rev up courage. And I note that Guernsey has been commenting about the, shall we say, the glass ceiling of the Bank of England. However, I must congratulate Guernsey that on its own it has moved ahead in other areas, such as insurance regulation, which has even surpassed the facilities that the mother country, UK, has provided. And this has given Guernsey a very good economic potential, which is not even enjoyed by UK. So, island regulations and regulators have a big responsibility to move forward and to start removing the doubts and take the plunge to democratize payments. After all, the debtor and the creditor, they need the services of an intermediary bank only as far as if this is not done through the second payments directive, which should facilitate C2C payment facilities. Thank you. That was an abrupt. Thank you.
Thank you, George. Really appreciate your comments and just sort of setting the scene, and also your experiences from Malta. Where would you say the most sort of pioneering activity is you're seeing right now in terms of island nations around blockchain? Like, are you seeing, I mean, there's obviously countries and destinations we all know about, like Singapore and Malta and Zug in Switzerland. Are there any particular areas of note that, beyond the ones that the usual suspects, I guess? You're on mute, George.
When the blockchain cloud was approaching Malta, most of the practitioners in Malta here, financial services practitioners, started looking into outside the island to find out, to learn what others have done. We found places like Japan. It's quite, Asia is very advanced in payment system. That is something to emulate from. Of course, in Europe, Zurich, which is shall we say, the birthplace of the banking facilities, have put their money where their mouth is, and then invested a lot in blockchain and cryptocurrency and in regulation of this. So we went to Zug and we went to Zurich as well and met a lot of consultants. As I said earlier, the pandemic apparently slowed down a lot of initiatives. If you're not going to have a job on the day and who's going to get food on the table, you're not going to worry about how to make payments. You just go to your bank, pay whatever it needs to be paid, and full stop. But now that normality is slowly creeping in or coming in, we will very much admire the initiative of the organizers of this conference to rev up the initiatives for interested parties to get together and start the bandwagon of this revolution. This helps not only the big players, the multinationals, but also helps, and this is where it all is the value of it, is SMEs. SMEs are at the moment facing not only high inflation, okay, and prices and non-availability of certain materials. So additional banking charges are the last thing they want to face, So the liberalization of banking facilities and banking payments is almost a democratic right, which the technology is now making available. And we know that through blockchain and through other facilities, these are very safe and procured. Like everything else, there could always be a few bad apples in the barrel, But we're not going to, throw the whole baby and the bathwater just because a few apples going rotten. There will always be apples who go rotten. We have to roll up our sleeves and start this revolution, continue actually the revolution which started before the pandemic came along. Thank you.
Thank you, George. I remember 3 or 4 years ago, Malta was really looking at a lot of STO exchanges. Have many of those or any of those materialized? You're on mute again.
Sorry, to let you know, George, I had to mute you when Gemma was speaking because there's a little bit of background noise, so that's fine.
So do I? Oh, I'm mute.
Please go ahead.
Okay. Well, we had CoinDesk and Binance who looked into Malta and are actually, making certain use of Malta's facilities. And of course, there are a number of small traders, organizations who are using fintech. However, the plants are in the early stages of growth, and we like to see the bigger plants, to come. The growth in our garden, in our fintech garden, is poised for growth. The regulator 4 years ago set up a sandbox for initiatives, and this has been reasonably well patronized. However, we very much agree that as a result of this initiative of the island progress that is happening, we should keep up. The flame is small, but it needs to be fanned. There has to be more bricks and pieces of wood put in on the fire, so the fire will grow and be seen from over the hilltops. Thank you.
Thank you. I know Lavinia was wanting to speak, but was having some issues with audio. Lavinia, did you want to try now?
I think we lost Lavinia, actually. She dropped out, but Aliki is still here.
Great. Aliki, any comments from you?
Hi, Gemma. I think George has really provided much of the thought into this whole ecosystem that we are talking about. I think from our end, when it comes to fintech, from the policy side, what we want to encourage is innovation. We want to encourage growth, but at the same time, there should be sufficient information related to consumers, that they are aware of their rights, that they are aware of where to take their redress to if anything happens. Likewise, for certain consumers that this fintech is trying to come forward to support with, there should be awareness made, particularly through the angle of digital financial literacy, that these consumers, once they start tapping into these products and services offered by fintech, that they're aware of what it is, what they're getting into, et cetera, et cetera. So this is where it's important as well to have a very collaborative way of doing things within any small island states, considering the size that many of our countries are. I'm just looking at one of the questions on St. Helena, where they have a population of only 4,500, and what can they do with fintech? So these are some of the things that's from the policy angle, we need to ensure that it is holistic and that we have these kind of considerations and issues taken into place. Thank you.
Thanks for your comments. I've also seen others, in addition to Aliki, supporting the comments made by George. We've got Vivian, who has said that we have an SME and a SIDS must have a financial revolution in order to evolve and have some level of financial freedom, as we're too dependent on larger countries. As a result of this, we're burdened by their financial regulatory constraints, which in my opinion are established to stagnate us from growth. And we have a question for George, which was, I was approached by a gentleman by the name of Eduardo Mangione, advising Dr. Joseph Muscat about fintech-based residency in exchange for FDI for Tonga. Can you elaborate if you have any knowledge of this program?
Hello. George,
we can hear you. Yes, go ahead.
Yes. Well, definitely, there's been a number of initiatives, and Joseph Muscat, ex-Prime Minister of Malta, he resigned about 3 years ago now, but he's still active in business and other activities, but he's not in Parliament. He's been one of the firebrands or introducing the blockchain in Malta. Okay, and he made good contacts with top players like Coinbase and Binance, and actually Binance came to Malta, and they are our client, Binance. PKF Malta, we service them as auditors. However, the question goes towards, as I said, the necessity of the consumers. What do the consumers need? Are they being served? Is the delay in Malta, which is an island of 20 miles by 12? If there are 3 banks, for example, of course there are 25 banks, but Bank A, if I send my money to Bank B, if my check is to be cashed, it takes 4 days. But this is stupid, If I mean stupid, perhaps not stupid, but it's a waste of time. You see, I went yesterday to a bank and to deposit a number of checks, and they said, well, George, these are coming from different banks, and this means that we have to go to central clearing, and central clearing only meets, and concludes twice a week. And if there is something which is not cleared, then you have to wait. Perhaps you have to wait for a maximum a week, and then you think you are in business. Money landed in your wallet. This is an example which highlights what other smaller countries are suffering from. Okay, because if my money comes into my account 4 days from now, I cannot take decisions for the next 4 days, because if that doesn't land in my money, that means I am out of credit. Okay, and other matters which are very obvious. I don't need to explain them. When you asked me about what countries were of interest in the blockchain and the use of the payment system, we traveled to Vietnam, for example. I myself was in Vietnam 3 years ago, and noted that because of the regulations and the infrastructure, only 30% of Vietnamese, and this is a country of 100 million, okay? And only 30% of the Vietnamese have a bank account. For some reason, the regulations to open a bank account are beyond normal people, So they need wallets, and some of them use wallets for small payments. This also encourages farmers in India, for example, to buy seeds and fertilizer for their fields, and they can't afford to go through the rigmarole of signing forms and opening a bank account, which will take years to open. So they have a wallet. These tokens and the wallets are a revolution. This is democratizing the ability of users. So this gentleman who told me about this particular company introduced to Joe Muscat, I don't have, but I can look it up. Thank you.
Thank you for your comments, George. If I may just play devil's advocate for a moment, because you've outlined lots of really positive reasons why digital payments and settlements are more efficient and more accessible. But what about the security angle? So say, for example, somebody's managed to deceive you and trick you into thinking you were investing in something or transferring it to someone, and you found out that they're being impersonated, and you've gone through the traditional bank payment system. You've got 4 days to try and stop it being received by the fraudster. Whereas in the digital payment system, like in the conventional banking system, you've got that backstop. Whereas with digital currency, you don't have the same recourse, or and that latency actually has an advantage in that particular situation. What are your views and comments on that? You're in.
Hello. Well, there are, it's not a, shall we say, a perfect system. However, what we have at the moment, we're paying too high for it. The services of a debtor and a creditor, okay? The creditor has sold and made available his assets, and the debtor has to pay for it. Now, the traditional method is to get licenses, permissions, go with the bank documentation to the bank, see that you got central bank approval, and if the payment, and you got money in your account, and banks sit on that money. If you're gonna cross currencies from dollar to sterling, from yen to yuan, then there are interest charges which are built in and not transparent. Okay, so the customer doesn't know that the transaction conversion rate and what interest are being charged by the banks for facilitating the transfer. Of course, it's not perfect, the digital. However, the speed of the digital payment can also afford you a protection, because if you know that in the short time available for the transmission, the money has not arrived because it has been deficient or something, then you can take action much faster than when you can take waiting 4 days for the bank system. I hope this answers your questions.
Great comments, and I think different things for different situations. And I think what you're ultimately pointing to is that this is another form of competition that could actually drive efficiencies in costs as well in the traditional banking system. It sounds like you're of the view that it's too costly, and that this will perhaps bring efficiencies to the incumbent banking system, and in addition to having these alternative payment gateways. You're on mute, George.
I always go, you are unmuting me.
I'm not doing anything. Other people are doing that.
I know, whatever. You are the one who the face we see, you see? And then there are the hide there. Oh, am I muted? Am I working? Is it working?
We can hear you, George. Go ahead.
So we both agree that it's not, rocket science. There is obviously a big resistance, and this resistance will be the dams will open, the water is there and putting pressure on the dam. Okay, pandemic has slowed down the progress. The pandemic slowed down progress on many things, not just this one. It has made progress on medical advances, because we got the vaccine. What used to take 10 years, we got it in 9 months. But otherwise, on financial services, it has slowed down the business. And the economies, the global economies, are now facing not only rising prices, oil and gas is going up, and there is the fear of inflation. And the last thing we need is resistance from the regulators to give us the ability to control our money and to transfer it as fast as we can for the least cost. Okay, and with the speed, with the rest of mind that the creditor is paid, and then paid in time for the right amount. Now there will always be a bad apple in the system, where you cannot have 100% foolproof system, but countries are very smart and looking into the potential of having their own digital currencies. You may have forgotten that Facebook 2 years ago tried to launch Libra, okay, a currency which has had at that time 22 partners, including people like MasterCard and Visa and other banks, JP Morgan and everything. With the pressure that he had, Facebook, he had to trim it down, and actually he was found that most of the partners left the program, and now I think he has muted down the whole thing, and he's going to do a fiat currency backed the digital currency. So it will either be a dollar and everything, but it is very much slowed down. This is a very good example of how not progress, but revolution has been slowed down because of pressures from the hegemony of banks and regulators. This is Facebook, with 3 billion members. If Facebook was stopped and slowed down in its initiative, imagine what smaller countries and islands can do, and how can they succeed faster.
Definitely. I mean, if you look at disruptive innovation theory, the power of incumbency, is very strong. The default, there's a lot of entropy in the system, but Vivian just made a comment, which is, I think, what George is saying in a nutshell is that fintech has evolved out of a necessity from his and other people's own experiences. And as another comment, George, I think you're the star of the show. I'm really enjoying having George. What a way to start my day at 4 a.m. in the morning. We are going to wrap up now, but I wanted to thank you all for attending today's session, and thank you to the panelists as well. Today's session was recorded, so a copy of the recording will be sent to all delegates. And if you'd like more information about today's session and the panelists, please visit the event website. And if you'd like more information about Powerledger, please visit powerledger.io. Thank you.
Thank you so much, everyone. Fantastic. Have a wonderful day and enjoy the rest of the forum.
Thank you.